Hello, welcome to another podcast of Master Investor. Happy to be here again with another valuable talk on money, business, and investing. If you're new to our community, make sure you hit the subscribe. Follow us on all platforms at Master Investor. Look for the logo. And we're going to ensure that you receive high quality financial education made simple to ultimately help you build passive income and true wealth. On our last podcast, we talked about why having a money mindset is key. Today, we're going to be covering ways that we can raise capital and why it's important to begin to invest with a wealthy mindset that is based on the new rules of money and as much the new rules of the new capitalism. Because if the individual who attempts to invest does not have the right rules of money, then that individual will lose in the game of money and ultimately will suffer financially for the entire lifetime of that individual. Money is always going to be here regardless of what is going on around the world. Money is a vehicle that we use to get what we desire and be able to move and thrive throughout the world. That is why it takes more money to fly than it is to drive, because we get into our destination faster. Therefore, the time that we take to be at a certain point by airplane is very different than the time that it takes to drive there in a car. So time is the most valuable asset we'll have, and that's why it's priceless. And that's why it's important to invest in your financial education so that you have the asset column producing passive income or positive cash flow. And that cash flow will pay for the entire living expenses that we have, any liabilities that we want to get. It could be a luxury, any trips, any diet or foods that we want to eat. Everything is going to be covered by the passive income. So today, the new rules are in effect, and we must utilize them to get wealthy using debt. The new capitalism world is based on the ability to use good debt to become wealthier. The old capitalism, people still use the mindset of saving money and working hard to make money. Here at Master Investor, you will learn how to use leverage and have control over the assets using good debt, other people's money, private investors, friends and family, seller financing. There are many ways that we can raise capital, and it's important to know what are those ways, because raising capital is the job number one of the entrepreneur, of the wealthy entrepreneur, because we have to train ourselves to put together great deals. And because the deal is so attractive and it is a sound business that has a track record, it depends on which asset class we go into. It will have a track record of the existing cash flow and what it has made in the past 2 decades. Then we can look at the financial statements and decide whether we could actually improve that bottom line, the passive income, by renovating, by adding more value, increasing the rent if it's a real estate property, and using OPM, other people's money, which is the bank's money. At times, we will have to raise capital twice or more than twice when we're doing a deal. For example, if we're acquiring a property and the bank is lending us 85% of the deal, so now we have to get the other 25% or 15% somewhere else. We can either use a credit card, if we have one, to put the down payment, or we can raise that other capital with other people's money who are looking for deals to invest in. So we can line several investors to show them the deal, and the deal's already great because the bank is willing to lend us 85%. Now we just have to raise the 15% of that deal. And we do it through the investors because it's attractive enough for them to put the money to work there, because their return on investment per year is going to be higher than having that money somewhere else, maybe if they're thinking about saving in the bank, right? And we can show them that they will get a nice cash flow back every single year, and they can recoup the money that they invested back with a certain amount of time, and we can show them exactly how it's going to unfold and show them an exit strategy to create more cash flow, and why it's healthy, because we can either sell the asset or we can keep the asset after we renovated it and we get a refinance on that property. So we can go back after 5 years of holding the asset, let's say, and we can refinance the deal, the terms of the loan and the interest basically of the loan, and that way we can borrow against the property, because the banks have noticed the improvement on management of the property after we took over, and so they will lend us on the appreciation of that, so we can actually see that money right away. We can collect the down payment back after 5 years, paid all the investors who put the 15% down. We paid them back, and we probably have some left over to distribute among them, and then we'll also get our part. So now we have control over the assets still after all investors are paid, and we are still collecting cash flow, and that is infinite return on investment, because now we have not only paid the investors back who put the 15% down, but we are continuing to control the asset even though we have no money invested into the deal. And if we raise the capital from the beginning, we will be getting infinite return on investment from the beginning. From the first check that we get from that real estate property, for you and I, that will be infinite return on investment, because we didn't put any money down on the deal. We raised the entire capital from the bank and from the private investors. And at times, we will put money down because we will have excess of cash flow coming in, so we will have to put our capital to work. And other investors love to see that too, because they actually feel more confident that we are also putting our skin on the game. But a lot of times, the bank's permission to lend on that deal is enough credit to make other investors interested in that deal. So important to understand leverage and control when it comes to investing. And raising capital is the number one job of the entrepreneur, like I said. And the rule number one of entrepreneurship is staying in business. So when we launch a business, whether it's a digital business, right? If you like the internet stuff, then I suggest you take a look at that and figure out how you can create your first asset, how to acquire your first asset digitally, because you have the ability to do it right now with hardly any cost on your end. But you have to have the knowledge and apply that, of course, into your life. and information that you get, right? You got to turn it into knowledge by applying it into your life. That's how we turn information into knowledge. But the information, we're giving it right now to you and everyone who is part of our community. So the most important point is to take action. Okay, make sure that you're taking action every day. You have to do something every day to get closer to either reach financial freedom or acquire a new asset, right? Create more wealth. So if you already reach financial freedom, meaning that you have one asset or more than one asset paying for all your living expenses, where you don't have to work at a job to earn income to pay for your living expenses, and that you reach financial freedom. Okay, if you're at that point, then you're ready to start building true wealth, which is duplicating and adding more assets to that asset column that can run on themselves. But if it's your first asset, I think if you like real estate, it's a great way to go into, because we're using OPM, and if you have good credit, then that's even better, because in your first deals, maybe you need to use part of your credit, right, to invest and to put a down payment. That way you raise the capital with your own personal credit. And the interest rates, you just crunch the numbers and make sure that the income that is producing the asset that the asset is producing, then that will cover for all expenses, all the debt service, whether it's the bank's mortgage or is your credit card that you need to pay back. All that needs to be added and ensure that that income is going to cover those expenses, the debt services for the credit card and the bank's mortgages. Then also leave us with positive cash flow. Okay, we will be able to tell what is the bottom line, what is my cash flow, my passive income, and that's what we're looking for, right? We are here to build passive income, and of course, sometimes we will get capital gains. When we invest, we either do it for capital gains income or passive income. We have to be aware what type of income we are getting before we even invest, okay? However, we tell everyone, our community here, our partners, everybody that is getting our ebooks, using our products, doing other products so that they can grow their wealth, we encourage everyone to build passive income, to focus on passive income, because when we do that, then yes, you can also take advantage of capital gains income, but you can decide that at that point in time because you have control over the asset. The most important thing is to have the control over that asset so that you can actually make decisions regarding the asset, whether we want to either sell it, roll the capital gains into a new asset that will produce 100 times more than that one, or for whatever benefits we see because we spotted an opportunity. That's what it's all about, is to train our eyes to see opportunities when it comes to real estate, businesses, right? If you like cars, then maybe you will have car washes that are automatic car washes, the new thing, right? That people can go in there and pay a membership or whatever it is. Whatever it is that you like, figure out if there's a product that can be put into the market to solve the problem or the need of that customer, and figure out how many people have that problem daily. And we have all the statistics by using the internet. So you can also start a digital asset where you either, build your own course, or you can get other people's products that are digital and not digital too. I mean, they're physical products, but you're just promoting the links and the websites of those people that will give you specific links to promote. Okay, and they pay you a percentage every time a transaction happens. It could be high ticket sales, as they call it, where it's a big commission, and a lot of times there are memberships, so you can receive residual income from those partnerships with those companies. And these companies are reputable companies. They're amazing, and big companies, and all different types of companies you'll find in different niches. So they give you the marketing tools, everything. They literally give us, as being partners with them, all the tools that we need to get started building passive income. because you choose products that are memberships and you focus on bringing in clients to those. You don't even need to put your face in that promotion. You can do it all with artificial intelligence and other people's videos. They give you videos so that you can also post. I mean, you have a whole marketing suite. So check it out. We have many resources on our website. So I'm gonna drop the link somewhere in the description, and make sure you get our ebook, How to Build Cash Flow with the Internet, Turn Passive Income On. Even if you're doing business offline in the real world, you're going to need the internet to do transactions, to do, marketing and different things. So that's why get the ebook, because it's going to help you understand how to start building your asset column with a wealthy mindset. In fact, it's the only way to build the asset column, because otherwise you end up with liabilities instead of assets. So you want to focus first on your asset column and improve that every single day. And we're going to have to talk about money daily. When we want to build wealth, we're not doing it part-time, we're doing it full-time. We're thinking about it all day and every day, because it's going to bring more benefits in our life. It's going to improve our health. It's going to improve the way we impact the world, because we're going to reach more people, have the ability to help out even more, to invest in causes that we're passionate about. So having the money thing mastered is so important. And that's why we're here, because Master Investor is more than an investment management company. Our mission is to elevate the financial well-being of humanity through high-quality financial education made simple, with lucrative opportunities to build passive income and true wealth. So what is the first asset that we are going to acquire? That's a question of the night, right? Of the day. Like, what type of asset we're going to acquire right now? We must put our mindset into that frame of work every day, because our whole goal is to acquire more assets into our asset column. And an asset is a business or an investment that produces passive income for us whenever we're not working. We could be sleeping, playing, traveling, anything, and we still get the passive income from that asset. A business is a system of systems, and it's continuing solving a problem in the marketplace, and that's why it stays in business, because we're raising capital. The business is built to raise capital from the front end and from the back end, from the clients, from the end user, and from the back end, from the banks. So if it's a real estate property, after 5 years of holding that, we can refinance the deal. We get the entire initial capital that we invested from the investors of the 15%. We get it all back and we get more. So now we have received the entire capital invested back, and we still have extra. Then it's money for nothing. It literally, the assets printing money every single month for us. And we can do that online too. We can do that with a website, with digital products. We can do that by promoting other people's products and services. You can do that by closing clients and buying different types of products that are expensive, if you will, or cost more money. It's expensive. That depends on the perspective of the individual, right? We shouldn't think that anything is expensive. We know the value of that, whatever we want, and then we decide whether we would like to pay it at that price or exchange it for that much. But it depends on the value of the individual and how we view money. So, one of the things that we do here in our community is that we always say, how can I afford that? Right? We never, even if you don't have the means right now, you always ask the question, and the answer always comes down to acquiring an asset, raise the capital, right? Acquire an asset that will produce passive income to either acquire that, or if it's an asset that you're looking at and you're saying, how can I afford that? Then raise the capital. It boils down to, You want a luxury? Okay, so we're going to build an asset that will pay for that luxury. That's the mindset and the actual attitude that we have to have, and we have to be disciplined with that in order to build wealth. The more assets we'll have, we'll get to a point where we are achieving what we call it here the formula of velocity of cash flow, which is we're compounding our assets on our asset column in different asset classes for passive income. We're investing for passive income, for phantom income, phantom cash flow. And phantom cash flow is basically income that shows up somewhere else. And it's the income that we get, for example, in real estate for things like appreciation, depreciation, amortization, which is the scheduled payments that we have on the debt. That's what amortization is. But that payment itself is income to us because remember, we raised the entire capital of that deal that we did. So the 15% was raised for the down payment and the 85% was raised through the bank. So that amortization, which is the scheduled payment back on the mortgage or the debt that we have with the bank and the investors, is income to us because the tenants are paying for that debt. So we're controlling the debt. It's getting paid. It's making us money now because we pay everybody. We pay the mortgage, the bank back, and we pay the investors back. We take advantage of whatever is left every single month because that's our capital, that's our passive income, that's the bottom line. So now we're literally not only printing money, which is infinite return on investment, that's what we want. So if we raise the capital from the beginning, we're achieving infinite return on investment, which is money for nothing. That's when we have no money invested in the deal and of our own, and we have control over the asset and we still continue to make money. So phantom cash flow comes from, appreciation, depreciation, amortization, tax benefits, and and those are like 4, I think, ways that we can see how phantom income works, because we are literally capitalizing on either things that we were supposed to pay money to, but because of depreciation we were able to keep more money and pay less in taxes. So that money that we actually kept under our control is instead of giving it to the government, is actually income to us. It turns income to us because it was an expense before. So those little things that shows up in a different, actually not little, but the details, a lot of investors don't even know this about phantom passive income because they don't have the financial education. So just right here with knowing that you have the ability within passive income to make phantom cash flow, which is the income that shows up somewhere else due to depreciation, appreciation, amortization, taxes, and other benefits that comes with using debt, which is already tax-free. Okay, when we use the bank's money, when we use credit cards, it's tax-free legally because money is created with debt. Okay, so raising capital is key. Do you see why? Let me know in the comments if you have any questions. Okay, go to our website if you need to have a live consultation to start your business, to start your first asset, if you need to mastermind, if you need to write down a business plan, something that is effective to put you in the framework and be accountable to take the steps necessary to make sure that you create that passive income and you begin to raise capital, because a business is always supposed to be built to solve the problem in the world effectively, but most importantly, right, because otherwise it wouldn't be a business, is to be able to be monetized, of course, so that it raises capital at all times. So a business is supposed to be built to raise capital from the front end, meaning that we can monetize that idea, that innovation legally, and then raise capital from the back end. So raising capital is like the most important subject when it comes to entrepreneurship and building wealth, truly, because a lot of people cannot even go weeks without working at a job because they feel like they need to live with a paycheck. It's like a relationship that is so, it has attachment, it has toxic attachment because the person is a slave to that check. If you're just working, or the individual is working just to pay the bills and they don't like what they do necessarily, then they're basically a slave to a paycheck. Okay? They could be happier if they're doing something that they enjoy doing, that it is their passion. So maybe a talent of theirs, and they're getting paid for that talent. And that is okay. However, you are either doing it to only help yourself at that moment, but if you could actually be more creative and have the financial education, you can turn your talents maybe into a real business, because you figure out, well, what are you doing in this place that you're working every day, waking up at 7 in the morning and you're leaving at 5 o'clock every single day, and that person controls your schedule and is making the schedule for next week, and is controlling the time and is paying you this amount of money. So you gotta really put a fork on the road and say, okay, if I go right, if I launch my own business, if I can solve a problem of this issue, if I solve a problem that people are having because of this issue, using my passion. So if you're working somewhere that you love to work, but you just don't like to be living paycheck to paycheck, and you want to create wealth, you can turn that expertise into a real business by providing a service or product that is served to the masses without you having to be present necessarily, without you having to work. Okay, whether you're creating, if you work, I don't know, at a clinic, or if you're a dentist, or if you're, a doctor, you could create a medicine, you could create a product that is generic that we can sell to the masses because they have this problem, and I know that, we can sell this to all these people because they're looking to buy a product like this already. We spot a problem and we feel that need because they need a solution. So we gotta monetize it by having systems in place. So if you can turn your ideas and your passions into a real business, and the way to tell if that's possible is by actually understanding systems and how to deliver a product and service to the marketplace on autopilot. That's why it's important when you build your entity, when you incorporate to start holding your assets, then that will be your first asset to invest in your financial education. So an asset will be listed on your asset column because it's producing passive income for you. And the most important asset that we have, if we use it correctly, is our minds. And of course our time, because those two are priceless. But we gotta invest our time wisely, we gotta rub shoulders with the right people, and we have to make some sacrifices. I mean, the role of entrepreneurship can be tough sometimes, and just like anything in life. But you have to be willing to make a decision at some point whether you're going to cut that core of the employment mindset and then jump towards the direction, the right side of the fork. Right now we're going to go right and just do full-time entrepreneurship because we understand the power that the new rules of money gives everybody, regardless of your background economically. It gives us the ability to create passive income instantly. We have the power to raise capital in our fingertips. Every day we're touching the tool that allows us to actually raise capital and make us very wealthy. So what is the business? What is the action plan? What are the goals that we have today? When we have great goals in our lives, then we actually become different because we are going to be talking differently because we're checking those goals every single day by the end of the day. So we are going to discipline ourselves to become a better version by having a list of goals. And majority of people, I find out that they do not have any goals in their list. They have no list. And procrastination can when you don't have a direction or a GPS of exactly where you want to go or where you're going, and if that is where you want to go, what is your ideal scene, okay? And know exactly what are your purpose in life, what moves you, what are your talents, what are your passions, how can we monetize them, can we monetize them? And if we can, then we have to look for something else that we can monetize, because that's the only way that we will be able to build passive income. Instead of you giving the money away to a salesperson, a financial advisor that tells you that the market is going up and it's a great way to make money, but they're talking with opinions. It's not real facts. They're estimates of how they hope that the economy will stay that way and they can sell in the future for a capital gain. So you're investing for capital gains without having control over that capital gains, except when the time that you trade that, you sell the stock that you purchase, or whatever paper asset you purchase at that time, or you acquire, or you invested in. But you invested for capital gains, and a lot of times in the market, the salespeople that have your money working in the stock market, which is working not for you really, because you have no control over your money, and you lose control over your decisions about building wealth when you give your money away. You got to learn how to make your safe money work hard for you, and the only way to do that is by investing in our financial education. You have to know exactly what you need to do with the money so that you do it successfully, instead of you being scared and giving it to a salesperson or investing it just because it feels good to get rid of it. It doesn't mean that you are investing. Traders are called traders because that's what they are. They're not called investors. They're trading in the market. There are ways that we can create cash flow. We have a section on our ebook, How to Build Cash Flow with the Internet, Turn Passive Income On, that talks about those strategies. So when you get to that chapter, you'll be able to see how you can create cash flow with the stock market. And so there's nothing wrong to have an investment that is based on capital gains. However, we still want to have control over that investment, and you can get capital gains in other asset classes that you have control over, like commodities, like silver, gold, or buying real estate to renovate and sell, right? And roll the capital gains over to a new investment, a bigger investment. Or we also hold the assets using 100% debt, so that the money is tax-free. We get the tax benefits. We get to keep all the passive income after everybody's paid. And so we're literally printing money legally for free, and we're using the new rules of money to get wealthy fast. That's why we always say here at Master Investor, it does not take money to make passive income. It takes knowledge. That's the first thing. It takes financial education, financial knowledge, okay, which comes from financial education. Once you have the information, we have to turn it into financial knowledge, which is applying it into our lives. We have to take action. What is the name of our business? What is our brand? What are we solving? Okay, who has the product? How are we going to get the product? Okay, what is the entity designated as for taxes to gain the most taxes? Okay, what is going to be our market share of our niche? How many people are in this market? Right, and the 8 elements of a successful business are this. We talk about it all the time. That's called the business and investor, the cash flow triangle, right? And it's for us, the business owners and the investors. So the 8 elements are mission, leadership, team, cash flow, product, legal, systems, and product. Okay, those are the 8 elements. The product is not the most important thing out of a business, but all the 8 elements are important. We have to focus on them, and we have to establish them. So whether we're getting a product from somebody else maybe we're using other people's products, and that is great because you have a faster return on your investment, and you can actually see the passive income coming in. Even without investing any money, you can raise the capital from the front end. Actually, doing digital assets can often put you in that position where we're raising capital from the front end very quickly, because we just have to put that message in front of those people that they will buy. Maybe they're in a different country or whatever part of the world they're in, and they purchase from that promotion that we did, that our company did for that other company. And we just get a percentage every time that person buys something from that company for the rest of their lives. So, we have the ability to build wealth right now. I want you to take action. Go to our website, MASTERINVESTOR.education, get our ebook, MASTERINVESTOR.money. You'll find the ebook also on our website. Just get the digital course, which it comes with additional bonuses. You'll have the ebook. You can download it straight to your smart device. It's going to show you literally how to get your business started, how to start building passive income. You'll have a financial statement that comes with the ebook, where you're going to fill it in. If you have Excel in your laptop, which I hope you do, then you can fill it in there, or you can actually print it and then fill it by hand. But I think it's better if you have it on your computer, but whichever way you can, just do it. Okay, and then you will know exactly what is your financial situation right now. You also have another agreement in the bonus section of that e-course that will help you capitalize on relationships. So when we meet somebody, maybe at the gym, maybe at the restaurant, another business owner, we went to a network, network event where we're networking with other people, and we're now meeting other business owners, and we have a network of other people that maybe want that solution. So now we put a contract between ourselves, our company, and that other company, the other business owner, and we ask them to give us 10%, 20% of every sale, whatever we negotiate with them, of every sale that comes from us, of our network. And so we send maybe 20 people we have on our network need that product. We send them that, we tell them via a broadcast email that this person has this product that they're looking for. And because we know the person and we can trust the business owner and we understand the product, and we can then deliver the message to our network and be confident enough that that solution is what they need to solve the problem that they have. So we can create passive income, we can raise capital, but we need financial education so that we can turn that into financial knowledge, right? And so we can do that right now. You're doing it right now by listening to this podcast. So I appreciate your time, because you're investing it in yourself to understand how to create wealth. We're going to be talking about money every day. We're doing a live stream on Facebook, on YouTube, on all the social media platforms to get the message out and help people understand the new rules for money and how to invest like the wealthy, using debt, tax-free, minimizing taxes all the way to zero, taking advantage of the beauty of passive income and of course capital gains income, but also phantom income or phantom cash flow, which is the income that we see that other people don't see because they lack the financial education. Therefore, their financial IQ is low because they have no financial intelligence. And financial intelligence gives us the ability to solve problems, financial problems. First, we start with our own financial statement, and then we begin to build an asset column. What is our first asset that we're going to acquire? Figure out your passions and talents, and then see if we can monetize them, because we can get very creative with innovation, but we have to, once we have that idea in our reality, then we have to monetize it, and that's entrepreneurship. So rule number one of entrepreneurship is to stay in business. How do we do that? By raising capital. So that's the job number one of the entrepreneur, of a wealthy one, is to raise capital, master that. The number one skill of an entrepreneur is to sell without selling, using systems in smart marketing. And the job number one of an inside investor or a master investor is to make money work hard. Our own money and other people's money, OPM. Okay, so let me give you the 6 different ways we can raise capital while we are investing in real estate. Okay, that article was published yesterday, I believe, on our website. Okay, it was either yesterday or before yesterday. So go there. I'm gonna put the link in the description, and you'll be able to read it. Okay. But let me give you the 6 different ways we can raise capital. Okay, number 1, family and friends. Now that we have a track record of not only we have the financial knowledge because we're applying it into our lives, and other people sees that around us, like they see, wow, this person is doing very well. They're going to see the change in us. So once we change our mindset first, then we can begin to change our core values, and now we set new goals every day with those core values based on that, where getting wealthy is a priority, and having assets, having your first asset, having your as many assets as it takes for you to be able to retire from your job, quit your job, no worry about paying for living expenses, and be able to thrive, right? Have, extra coming in because you're compounding, you're reinvesting that capital that you're getting from those assets back, whatever is left, raising more capital to have more assets, so that it gives us more freedom. We have more control, we have more options, we have excess of cash flow. The 3 E's of an entrepreneur are education, financial education, experience, and excess of cash flow. So focus on having those 3 E's by acquiring assets. What is your first asset that we're going to acquire today, right? What is our set of goals? Make sure you work on your core values and begin to set goals every day on your list, on your journal, on your phone, on your computer, and you have to check them off at the end. Try include health in there too, like you gotta work out every day, go for a walk, doesn't matter, get moving. When you work on the computer, stand up and do it, not always sit down. Use your surroundings to be creative, to stay according to that list of goals. But we need to have building wealth ourselves in there. We have to do self-development. So put yourself in the list of goals to make sure that we pour in self-development and financial education. And we have to now turn that and apply. What is going to be the actions that we're going to take today with the information that I learned right now? That's how we're going to shape the new future, and the future that we actually want for ourselves, right? Because if you think of something, that means that we can actually attract it because we thought about it. We can grasp our minds around the idea that we envision. And now we bring it into reality by aligning ourselves with goals that are specifically to help us even become more in tune to that. And then once we pull it in, because we're matching the vibration of that thing that we want, right? We're matching the essence of what it will be like to experience that. So yeah, very important to understand the core values and work on ourselves every day. I know there are some days that you may not want to do things, but trust me, keep going. Just get up and take a breath, eat well, invest in your diet, be healthy. It's going to help you be strong mentally, and begin to understand the new rules of money and play with those rules. Apply it. That's how we turn information into knowledge, like I mentioned several times already, but I cannot stress it enough. That's why we keep going over and over. So family and friends, that's number 1 way we can raise capital. So it's not about telling our family members in the wrong time when to raise capital. We're going to approach them when we have a track record, when they can see, and we're going to do it legally with an agreement, and other people are going to also invest with us that are not family members. So they're going to see that. They're going to see the results that we're getting and the way we are thriving in life. We have options, we're free, right? We're independent of a job. We don't have to work for somebody else. We have assets that are working for us to make us wealthy and reducing debt, which is tax-free, and We're investing for passive income, even more tax-free. We pay zero in taxes legally when we have the right accountant and the right tax business lawyer who understands the tax code and the tax laws, and as much the business law, the corporate laws, so that we can use them to minimize taxes, because that the government and the laws state that if we do certain things that they want us to do for the economy, such as become a master investor basically and invest for things like technology, oil, food, housing, they will give us tax breaks, and we're doing things that they want us to do, so they become our partners. And it's a beautiful thing because we're getting wealthy for free. We literally printing money legally for free. Okay, so family and friends, they're going to be allies in the future. Maybe not now when you're starting out. Sometimes you can actually have a great bond with somebody even before you become well known and investing, and you can actually raise capital from the beginning. So you may know a person for a long time who believes in you from the beginning, and they don't need to see other people investing in you in order for them to invest. So you can actually approach a friend or a family member that you believe they can trust in you, and you can launch your first business, raising capital. Number 2, seller financing, but always do it with an agreement. Always do it with paperwork, be professional from the beginning. Number 2, seller financing, or also known as owner financing, which I love this one because it allows us to use the owner's own personal worth of the value of the business to take control over the business that he or she is selling us. And we're using seller finance. He's giving us basically the loan. He's saying, okay, you pay me back in 10 years, 30 years, every month I'll get this from the cash flow that is already creating. Because the business, as it is it's paying all the expenses that exist, and it's leaving, let's say, a certain amount every single month of positive cash flow after everybody's paid. Now, out of that positive cash flow, we have to pull out the mortgage that we have with the seller. So he's going to keep part of the cash flow. And a lot of times that's great because we know that the business is great because it's going to be able to pay the seller back. And it's going to also put more positive cash flow into our pockets. That's our bottom line. That's what we want, passive income. So we're using seller financing, we're using OPM, that's other people's money. And basically, he's not even giving us the money. He's just giving us the credit, which is invisible. And he just takes out of the cash flow every single month. So we have a contract where we have to make that payment to him. Okay, he never gave us the money, he gave us control over the asset. And he's saying, okay, this is worth this much, and I want 10 years, this much out of the cash flow. And we do seller finance. And so maybe he started off controlling the business, or maybe he has something else to do. He wants to do something else in life, right? And that's what people, a lot of times, they sell their assets and they want to do something else because it's requiring them time to handle that asset. And maybe he has a different opportunity. So always ask, why are they selling, and figure out how the numbers look on the financial statements, and can we improve the bottom line, and can we actually get the seller finance to give us 100%, and we can actually pay it with the income of the business, the passive income, the bottom line. Can we pay that seller back the amount that he's saying, and also leave us with positive income, positive cash flow that we can put in our pocket so that we can acquire another asset or get a liability that we want, because we created this asset to pay for a certain liability, for a certain luxury that we want, something that we want to experience in this moment, and it exists and it costs us money every single month. But our focus is to build an asset that will do that, and then we move to something else. We work on another asset to build it and put it in our asset column, and then it's working to pay for something else. It's working to pay us for our vacations, and everything that we do in life, we're getting it paid by the assets. Very important. So control and leverage, right? So 2 ways we talked about: family and friends. The second one is seller financing, control and leverage. It's all about control and leverage, right? We're using other people's money. That's leverage, and we're controlling the debt. Number 3, finance out of cash flow. is basically when we're buying a business, like I mentioned earlier, and when we do it through the real estate property, then we are taking the loan, basically. We have a loan agreement with the seller that specifies the amount of the loan, the interest rates we will pay to the seller, and the length of the term of the loan. That is seller finance, and finance out of cash flow is the deal that we have with the business owner. And we have an agreement with the seller, lender, or investor to pay them back through the cash flow that the business generates. This means we are essentially borrowing from the cash flow we expect to receive in the future. Number 4, lender financing. There are many types of lenders available. This is where a mortgage or business broker can be a valuable member of our team. Okay, so many ways we can raise capital. There's always money to be found. Number 5, assumable loans. That's when we take over the loan of somebody and we have to keep the rate or the interest rate and the terms of that loan. So we have to figure out before we do that whether that's good debt or bad debt. Is it something that is going to produce passive income? It's producing passive income right now because the property or the business is making that much money and it's going to be able to cover that loan. The one that we're going to assume and take over is going to cover every single month until it's paid off, and is it going to leave us with more positive cash flow after everybody's paid, because we want to have bottom line. The bottom line, the passive income, that's what we call it, the bottom line, the cash flow, right? So we're looking for that number, like what is our passive income, right? And if it's an assumable loan, remember we're using OPM, other people's money. We're not even using our own money. We're acquiring a loan that is making money, because not all debt is bad. There are 2 types of debt, good debt and bad debt. Good debt makes us wealthy, and bad debt takes away from our pockets. Number 6, other investors. There are many people with money but no interest, time, or expertise in finding and managing certain investments. If we can prove that our investments will give the investor a good return and our team is set up, they may be willing to invest with us. Let's say we're buying a property, like I mentioned earlier, and the bank requires us to put 15% down or 25% down. We will use private lenders to raise most or all of the equity money needed for the down payment of the property. We will need to put together a solid investment prospectus that shows the potential of return for the investors. The bottom line is that there's always money to be raised. When we have the skill set to put deals together, to see opportunities, to understand financial statements, and to put investment prospectus on paper to show other investors to raise capital, then we can actually take advantage of OPM and getting wealthy based on the new capitalism and the new rules of money, which is to use debt. It's based on using debt, using other people's money to get wealthy tax-free. I hope that this has been helpful. Let me know if you have any questions, and glad to be here again on another valuable day on money, business, and investing. Let me know what you think. Leave some feedback. Go to our website, get our ebooks, the 10 New Rules of Money and How to Build Cash Flow with the Internet, Turn Passive Income On. Download the financial statement and start working on it. Figure out where you are financially today. What are your passions? Can we turn your passions into a real business? Can we solve a problem in the marketplace with the passions based on a product or service that will be set on autopilot to be delivered to the masses? What is going to be our first asset? We understand that the new rules of money allows us to get wealthy for free legally by using debt, tax-free. Today, money is created with debt, and that is why debt is tax-free, and we encourage all of our partners to invest in financial education so that we have more leverage, meaning more higher returns. When we have higher leverage, the returns increases, and we get to infinite return on investment where we're using OPM 100% and we're creating passive income with that, and we're controlling the assets and as much continue to collect that passive income, which is money for nothing, is infinite return on investment. Thank you for listening, bringing you the good and bad news of money, the business principles that work in all economies. I'll see you on the next live broadcast. Make sure you go to our website, get the ebooks. We have 2 new ebooks coming out this month. Stay tuned and take massive action. Stay great and wealthy.